Hi, this is John Enright and Dan Bennett with Custom Wealth Management. And just in a few moments, we will introduce you to Alan Sherman with AJ Hodis CPAs. Today, we are going to provide you with some very important information on the Payroll Protection Plan and on the Emergency Injury Disaster Loans, the EIDL, through the SBA. Perhaps no single provision in the CARES Act has received more interest from business owners than the Paycheck Protection Program, which is a partially forgivable loan program offered through the SBA. These loans must be applied for no later than June 30th of 2020 and can have a maximum maturity of 10 years, depending on ultimately what they are used for. So who qualifies for these? Businesses, including sole proprietors, independent contractors that have fewer than 500 employees. Eligible borrowers are required to make a good faith certification that the loan is necessary due to the economic uncertainty caused by COVID-19. And this is a check mark on the website. How much? Loans up to a maximum of the lesser of $10 million or 2.5 times the average monthly payroll costs over the previous 12 months. Paying a variety of costs, including payroll costs, group health insurance premiums, salaries or commissions, 1099s paid to contract workers, mortgage interest, utilities are all examples. What of these is forgiven? A portion of the loan is forgiven in the amount spent during the first 8 weeks after the loan is used for the above expenses. If you're anything like me, you're wondering what's the catch. In order for the above amounts to be forgiven, the business must maintain the same number of employees in 8 weeks following the date of origination of the loan, as it did from either February 15th of 19 through June 20th of 19, or from January 1 of 20 through February 29th of 20. Any employees laid off must be rehired to qualify. Finally, the maximum interest rate that can be charged for a loan made under this program is 4%. Small businesses tend to be risky borrowers, so the ability to borrow up to $10 million at no more than 10% and over a term of 10 years can be pretty significant for any small business.
So the next part of this is the Economic Injury Disaster Loan, or the EIDL, the $10,000 emergency grant. It's another extremely important benefit of this bill. These loans aren't new. They've always been around, and they've always been available in the event of a disaster. However, this is the first time that a virus or pandemic event has been defined as a disaster. Because of that declaration, many small businesses in every state throughout the country are now eligible to apply for the Economic Injury DL or for these particular loans. You should too. So what are they? In particular, they are loans up to $2 million. The term is for 30 years. Interest rates range from 3.75% for small businesses and 2.75% for nonprofits. The first month's payment are deferred a full year from the date of the original promissory note. Most importantly, and I think what often gets forgotten, is the $10,000 emergency grant. Borrowers of this grant can receive $10,000 in an emergency grant cash advance that can be forgiven if it's spent on paid leave, maintaining payroll, increased costs due to supply chain disruptions, mortgage release payments, or repaying your obligations that cannot be met due to revenue loss. So applicants can get the emergency cash even if they don't qualify for the additional funds. So these qualifications are based on self-certification. And it's our understanding that the $10,000 grants typically received by applicants after 3 business days of approval, which can range from day to day, particularly with the volume at this time. Now, you can apply for these loans directly on the website that's shown across your screen now. Make sure to apply for the economic injury for the coronavirus and not the physical damage due to another disaster. So make sure you choose the right one during your application process, and give yourself enough time too. It's not a 5-minute process. So when will you get your money? Unfortunately, right now we don't have a crystal ball, and there's not a definitive timeline from application to approval on these loans. There are some 30 million small businesses throughout the country, and given the high number of unemployment claims that we've recently seen over the last couple days, that there will be a lot of demand for this relief. So our advice is to apply now, and obviously don't wait. I'm going to turn this over to Alan Sherman now. Alan's a CPA with AJ Hodis, and Alan has actually designed a nice system in a spreadsheet to help you determine the amount that you might be able to qualify for the loan. So Alan Sherman, take it away.
Thank you, John and Dan, for allowing me to share this part of the update on the recent legislation. For those of you that don't know me, my name is Alan Sherman. I'm a CPA with Masters in Tax and a member of a local accounting firm in East Syracuse called Arnold J. Hodis & Company. There are a number of components to this law, but we will skim through all of them as much as we can that relate to businesses and individuals. Since we don't have sports, my plan is to do this as a 2-minute drill. Before we get to that, though, I just want to add a couple extra thoughts on the loan programs. The Paycheck Protection Program, as part of the loan when it's forgiven, it's excluded from income, tax-free. That's pretty big. So any piece that's forgiven, not the piece that you have to pay back, is excluded from income. Also, the Treasury released a preliminary application that we can share with you just yesterday, along with a very nice fact sheet that goes through a series of questions that are commonly asked. The EIDL loans, make sure that you strongly read the fine print details and self-certification requirements for these loans. There may be some devils in the details, right? May require a personal guarantee, collateral, depending on the amount that you're requesting that gets approved. May have potential covenant requirements. May require further financial reporting, maybe a review, maybe an audit. There may be some restrictions on the use of the money, depending, especially on distributions to owners during the payback period. I'm not saying that those are the cases. I'm just saying read through the details to make sure that you know what you're signing up for. I also put together a YouTube video on the calculation of the Paycheck Protection Program. It's a step-by-step, and I think would be very helpful if you were to go through that process when you go to apply, to at least get a general idea of some of the costs that are included in applying for the loan. And then also too, when you go for forgiveness, some of the details on how the forgiveness will be calculated.